to Sean.
Thank you so much, Jenny. Hopefully this mic is working. Oh, magic. We've shuffled the audio just so you can match the face. It's a test afterwards. Have you got the picture of the right person underneath? Wow. Just to give you a clue, I'm Sean Kidney, CEO of the Climate Bonds Initiative. On our panel today, we have, well, pretty illustrious panel. John Hefner, who's the Deputy Director of Sustainability at Hang Lung Properties. I think you should know what Hang Lung Properties are. Dr. Nadira Lamrado, who's the Head of Sustainability at Jardine Matheson. Again, a household brand name. Xing Lang, who's the Director of Green and Sustainable Hub at Asia Pac for Natixis CIB. Natixis is, I'm going to say, one of the world's leading green banks. They would argue they're leading, and there's a long story behind that, but we've been working together for many years. And then Neka Chiki-Orbi, who's the Head of APAC ESG, Ratings and Research at Sustainable Fitch. And note that name. It's not Fitch Ratings, it's Sustainable Fitch. What's a rating company doing called sustainable? Well, she's not alone, because we have the same thing happening in S&P, the same thing happening in Moody's. There's a revolution underway. When we have the major rating agencies deciding that this is something to work on, it's not just that the market's changing, it's also they can see the need for it. And I have to say, well, there's a storyline here, right? We have an enormous challenge. You're aware of the challenge. We've heard about it earlier on today. Climate change, not just climate change in terms of emissions reductions pathways driven by policy and the flow-on impacts of those policy change, but climate change impacts. We've had a lot of typhoons in Hong Kong this year. This is not the historical norm. We can expect to have much more severe typhoons in the future. We've had severe droughts around the world. I was in Spain when it was 47 degrees only a couple of months ago, and it was way too early for that kind of heat. We will have this year the hottest year recorded year on Earth. And it will be the second year in a row, because last year was the hottest year. And next year will probably be the hottest year, and so on. We have to start preparing for impacts of climate change in all sorts of different areas. This change, this impacts change, and the policy change from governments beginning to realise or starting to take very strong action, as Europe and China have been for 25 years, taking strong action on climate. I mean, that's why we saw half the world's renewables built in solar last year. That's policy action on all of this stuff, is leading to all sorts of changes in our supply chain in our world. Before I get to the supply chain, I want to stress what's happened already, the wins we've had already. We have actually had an incredible mobilization of capital. When I started working in China with Ma Jun in 2014, we had $50 billion of green bonds outstanding. Do you know what we've got now? 5 trillion green bonds, US, outstanding, not Hong Kong dollars, US dollars. This is a 100-fold increase in that time. I mean, hey, 10 years took a long time, thanks to Natixis and other bankers. But nevertheless, that's an extraordinary change. We've managed to show that capital wants to move if we give them proper risk yield adjusted opportunities, which is what we've been doing. We've managed to get regulators taking this seriously. So led by the People's Bank of China, and now HKMA, and the 150 central banks that are members of the Network for Greening the Financial System, risk around climate is starting to get baked into our financial system in various measures of all sorts. The understanding of risk and the guidance that comes from that, taxonomies, and we'll see some announcements this week from Hong Kong MA, but the consultation phase and taxonomies are becoming part of the architecture of the system. And we've also got an industry of organisations like Sustainable Fitch, like Natixis, working for change to support people to get used to it. That's what's happened so far. But we've clearly got a long way to go. Otherwise, we wouldn't be feeling these increased typhoons. We wouldn't be realising that we've reached 1.5 degree warming this year. We wouldn't realise that change has now got to speed up. Materials are beginning to change. If you look at the Hebei province transition plan for the steel industry, it's fantastic. It's about green DRI, it's around recycling of steel and so on. If you look at the new innovations around low-carbon concrete, cement that are coming on at surprisingly low price differentials from ordinary, like 5% and 10% extra cost, which we can deal with. It sounds a lot when you're in a concrete margin, but when you're running a building company, 5 to 10% wholesale price is about 0.1% of building cost, I think, although we're going to hear from John in a minute what he thinks about that question. We're seeing disruption already in supply chain. Look at what's happening in the vehicle industry. The carburetor industry is disappearing. This is a disaster for companies like Bosch in Germany because we're all going electric. 50% of cars sold in China last year were electric, but it wasn't just China. 70% of cars sold in Nepal last year were electric. 26% of cars sold in Pakistan last year were electric. 27% of cars sold in Turkey, and so on and so on and so on. And by the way, it was 60% in Ethiopia. Like, what the hell? It's not Europe that's leading the way. It's Asia and emerging markets. That one with enormous changes for supply chains, which is going to impact on oil quite soon too. We expect to see significant disruption of the high-cost oil producers in the next 5 or 6 years because demand has peaked in China and is going down. It's complicated, but it's happening. The question is, how does this play out in the supply chain? And for that, I'm going to turn to our audience. John, perhaps I can ask you first, your reflections on the challenges and what you see happening around the greening of supply chains, the shift to a more resilient economy that should be implied if we adequately make these changes.
Sure. Well, thank you. It's great to be here. I realize I don't need to pick up that mic, actually, which is great. So, yeah, let me maybe share, I'm going to share Hang Lung-specific perspective, but also some broader industry initiatives and insights that come out of our own experience. And so, you know, starting with challenges. In the real estate sector, I think it's well known that if we pay attention to our indirect emissions from construction, that's the largest source of our emissions, our Scope 3 emissions. So Hang Lung's been on a journey where in 2020, I think was the first year we actually took inventory of our Scope 3, our indirect emissions, for the first time forming a picture of what those indirect emissions look like. And we very quickly saw from that it's mostly from embodied carbon from construction, if you're a developer. And then within embodied carbon, it's steel, concrete, aluminum. And so then we tried to double click on those, as we always say, to see what can we do about those sources of emissions. So the first big challenge for us is just how do we try to drive down emissions that are indirect. And in our sector, indirect emissions is a much larger share of total emissions than another sector, like industrial, for example. It might be right on site, the production and emissions. So we don't have control over those indirect emissions. So that's the first challenge. The second challenge is around data, not having good data about the emissions. And so we did our Scope 3 inventory, then we did a 3-year forecast of emissions, and then eventually, this past March, we published our Journey to Net Zero paper, which was based on a detailed decarbonization model out to 2050. We developed it bottom up, meaning that we really tried to reflect inputs from different sectors about how things will decarbonize. So for example, what does the China Iron and Steel Association say the emissions intensity of steel will be in 2050? And then that goes into our model. So by the end, our emissions go from about 1 million tons in 2023 to below 100,000 tons by 2050. Now, we have assumptions laid bare in the paper. I would encourage you to read it, and please challenge us. The reason we put the paper out there with all of our assumptions made quite transparent is that we want people to challenge us and say, I think you're being overly optimistic here and pessimistic there and so on. But there is a trajectory. But it's very clear within that trajectory, steel, concrete, and aluminum, which doesn't get talked about enough, are major concerns for us. So what do we do? December 2023, we joined Steel Zero of Climate Group, which commits us to aggressive steel emissions reductions. By 2030, we're supposed to be 50% reduced the intensity of the steel we procure relative to our joining. And why do we do that? Because we wanted to light a fire under ourselves. We wanted to go from being passively waiting for sectoral decarbonization to being a more active role. Started reaching out to suppliers, and we heard from steel suppliers, and I'm just focused on steel for simplicity, but some of the lessons apply elsewhere. they told us we're not getting a demand signal from the real estate sector. We're hearing that from the automotive sector, but not from real estate. So that was surprising. But then we looked for opportunities to procure lower carbon emission steel. Last fall for our Plaza 66 Pavilion extension in Shanghai, we worked with Bao Steel, procured emissions reduction there, steel with lower emissions. We just announced last week in Westlake. So altogether, we've now procured 2,700 tons, with averaged across the two projects is 45% emissions reduction relative to conventional steel. If you told me a couple years ago that that was possible, I would have been surprised. Even though we made this commitment, we knew to be quite aggressive. There are things available in the market now. China is starting to move, so I think that's the good news. However, there's still an incremental cost. I can't say how much, but management's willing to do that within reason on a project in the context of the overall project. But up to a point, we're still disciplined with our money and finances. So the challenge is really getting to price parity around some of these things. If there is an incremental cost too, our tenants don't necessarily care. If we say this Plaza Pavilion 66 extension is made with lower carbon emission steel, does it change tenant behavior? The answer is no, not yet. And maybe it won't for a while. So what are the drivers? The drivers, because we have an SBTI commitment, we want to do the right thing and so on. So I'll just stop there and allow other colleagues to jump in on the discussion. But I would say, between 2020 and now, I have to say, we're happy with the progress that we made in understanding our emissions, understanding from a materiality perspective where to focus, engaging with suppliers, working through our main contractor up to suppliers in the market, having direct conversations with them. The last thing I'll just note is there's a real estate steel initiative more broadly that brings together all the players, which is really in the spirit of shifting supply chains so that the chicken-egg problem is being addressed. We have steel suppliers and real estate companies in the same room talking to each other since last year about how we can move forward faster together. And I think that simple thing of having a conversation in the same room can already lead to some new opportunities.
That's a critically important point. Yeah, I'm going to call it aggregating demand at the end of the day. In terms of the suppliers you've been dealing with, how, I know they're saying they're not getting the signals, but when you start saying, look, we're aggregating signals, responsiveness, readiness to move, what are you seeing in the suppliers that you have? I mean, how ready are they to act as you start talking about this?
I think the largest, like Bao Steel in particular, that we've now transacted from twice, which is the largest steel supplier in China, is very keen to engage with the real estate sector, and they're investing in R&D to decarbonize steel. And so they very much welcome the other large, Hegang, HBIS, a lot of the large suppliers also, I think, engaged to start working with real estate companies. But I think with the real estate market being soft, I'm not sure that there are a lot of real estate companies that are really truly making this demand signal yet. So they say, you let us know that you're interested, let us know what your specifications are, we will respond. On the real estate side, though, people still need assurance on the data. So do you have environmental product declaration? Do you have third-party verification of the steel that we're going to procure so that we can report it with some confidence? But I would say there's a responsiveness. And we also learned in the automotive sector, some of the signaling events actually didn't involve a large quantity procured. Like when Mercedes and BMW procured steel, I think there was a very public announcing and sharing of this, but it was more the signaling effect already had some consequence, even if the quantity wasn't that large. So I would say for another real estate company, even if they only want to do it for 10% of the steel procured on a project, let's say, where there's incremental cost, it will still have a signaling effect, even if they don't want to do it for the entirety of the project.
Which is, I guess, at the very minimum, it starts people thinking about growing business lines, or at least that's what we'd hope, I guess. But Nadir, if I might turn to you, you've got an extraordinarily diversified portfolio of holdings. Much more complicated in terms of the variety of things. What do you see as the challenges and what are the developments in your work that would be useful for the audience to know?
Yes, okay, so similar to what John said, it is very much, challenges in the market when it comes to actually the availability of different types of materials, for example. We also have a property portfolio company, Hong Kong Land, and they are also involved in similar types of initiatives to try to drive that demand signal, working in a pre-competitive way with the market to try to really get the suppliers a bit more invested as well in these low carbon materials. So that's one of the big areas. Since John covered so well the outside of the market, maybe I'll speak a little bit more about the internal challenges that we're facing, actually, which are a bit more related to the change management aspect of the whole thing, right? So we have actually a lot of drive from the top. Our senior management is very much committed. Our chairman is very much committed to decarbonizing portfolio companies and moving things forward consistent with net zero. However, there is still the operationalization of that. And that's actually, at the end of the day, talking to individuals within the companies who've been working on their different roles for a very long time, whether it's procurement, whether it's projects team, whether it's operations, and telling them that now we need to also incorporate sustainability or climate or circularity, what have you. And so part of the challenge is actually being able to do that in a way that is that manages or balances the needs that they need to be meeting, and at the same time being able to fulfill the requirements that we have when it comes to decarbonization. So as John mentioned, that incremental cost, that's a real challenge. It's a real question that needs to be addressed. So I would say that that's actually a common issue across all the different businesses, all the different portfolio companies that we have.
You talk, when we were talking earlier, about the change management challenge of working across procurement teams in so many different businesses and changing. Can you tell us how you're making progress on that one? Because that's hornet's nest, I imagine.
Yeah, so for that, so again, it's an internal work, I suppose. So the way that we work on sustainability at Jardines is we, at the group level, have a sustainability team, but every one of the different companies also has their own people responsible for sustainability, and they have ownership over their own journeys. So what we do is ensure alignment, working across the different portfolio companies and making sure that we're all kind of still on the path, we're all moving forward together at the same time. One of the things that we recognized early on, of course, because quite a few of the companies have SBTi commitments, is that with their Scope 3 targets, they need to now start to think about how they're going to be engaging their suppliers, especially around Category 1. So some of the questions that came up, of course, are, okay, although we would be thinking about it from a sustainability side, it's not us who owns the relationship with the supplier.
Yeah.
So what we've started to do is actually engage the procurement team directly. So the sustainability teams internally are working with their procurement colleagues, and we at the group are bringing everyone together at the center to really kind of discuss, what are some best practices, what are some potential standard operating procedures that can be put into place, and what are some learnings from the different companies that they could be implementing. So that's the way that we have started with engaging the procurement colleagues. One of the really important things to highlight also is that procurement knows procurement, and we, the sustainability team, knows sustainability. So they need to bring their expertise and their knowledge and their key skill sets to the issue of sustainability, instead of us going to them and saying, we know how you're supposed to do things better, which actually is not the case. In fact, we're asking for their advice as our expert colleagues internally.
But sometimes just putting it on the agenda when it's not on the agenda can make a big difference, I imagine, right?
I think for most of them, they were quite engaged and interested in learning more, because we've been talking about it for quite a number of years already. So they do want to know, how can I contribute? Now it's actually giving them the chance to be able to contribute in a very concrete way.
In Europe, what are the policy initiatives coming through? This is one of the recommendations we made in a high-level group many years ago, and the Commission's now looking at implementation, is to require financial advisors to offer customers sustainability options. Simple as that. Not to sell them, just to make sure they're aware of them. When we've seen that happen in France, for example, under regulation, we've seen a drastic increase of people taking it up because they're generally reasonably equivalent options, and an awful lot of citizens would like to if they knew they existed. At the moment, they're not offering it even. So that's what I mean putting on the agenda. You know, just by getting it on the agenda, it can make a big difference.
I think one of the questions that I would, or one of the points to supplement that is that it's not a matter of not knowing what's out there, but it's a matter of kind of aggregating that information somewhere where it's easy to access, which I think is where the buyers group for the low carbon materials comes in. That the property sector, for example, coming together through the PropTech Alliance and so on. I think that these kinds of engagements are really useful. And it also helps that there are actual definitions of what is sustainable from the perspective of the products that you're actually procuring. So whether it's the CIC, the Construction Industry Council, I think John can supplement here. So they have, you know, a set of actually a very clear criteria defining the greenness of certain materials. That is actually something that's very useful because it helps to make sure that there's alignment and credibility to you saying that I'm using low carbon steel, for example. Which I very much trust that John is the expert on this panel. But just to point out that, you know, these kinds of taxonomies are very useful, and they don't only exist in the financial sector.
Ghislain, if I can turn to you. Now, TIX is notable because it was one of the first, if not the first bank, to introduce internal risk weighting in favour of green investments as part of a risk management strategy in the bank. And I've got to be careful here because Societe Generale has done the same thing now, and Tessa's in the front audience, and Credit Agricole has done the same thing as well. But Natixis was a real leader in this thing. That's a background noise because I'm assuming that provides an incentive internally to flush out more green deals, including in supply chain. So I'm just wondering how you see the challenges and what you see happening in the supply chain side of things as distinct from the large corporates that we started the green finance market off with.
Thank you, Sean, for the questions and the introduction as well. So first of all, I would address a fact that maybe everyone works in a bank would agree with me, is that supply chain has been critical for us since the very beginning, because the risk and the opportunities embedded in supply chain is very critical for us in terms of credit, from credit perspective, or from deeper engagement with our clients, or even to identify new prospects, etc. So it has been there. And for me, as a sustainable financing practitioner, I would say we are here to support net zero transition, which means we cover the both sides, the supply side and demand side in the supply chain. So we identify the opportunities. Once we see there is a chance to have a support to transition, we will be there. And as John and Nadira has already introduced a lot of their interesting observations in the demand side, if I can say so, we have observed plenty of cases in the market, and I would say personally I'm quite optimistic about the trend of the greening supply chain process is there. For example, we have seen our clients, they are in manufacturing, as you can imagine, measuring their product carbon footprint or deploying massive renewable energy capacity because their key clients asking them to do, or providing incentive for them to do. Also we see that there is a transaction in the market for sustainability-linked loans that are embedding the supply chain elements in the transaction. For example, the ratio of responsible sourcing, local sourcing, or the ratio of the supplier who actually set SBTI aligned targets, etc. So those are the examples we think are quite positive. And for supply side, I would say hard to abate sectors this morning we have talked a lot, and John also mentioned for construction material and steel. To be honest, I think, I know for now, maybe it's still wrapping up, but my view is we see there are a lot of supporting there in the market. We have a lot of international or regional sector benchmark or trajectory to provide a ground for those sectors players to action. So, for example, Sean, the steel, I think CPI is very familiar. So, on that part, quite optimistic as well. But what we see as a missing part in the market maybe is quite about we have so focused on the green credentials, but kind of putting less attention on the components that will make the transition or greening possible. And that's why Natixis is involved in the ICMA's Green Enabling Activity Task Force and trying to push for that.
You've been in so many things. You're in so many initiatives. But is the deal flow coming through at a green supply chain level? That's what I guess that's the tough question. I mean, we've had so much talk about it, and we've been successful at getting majors, big companies and big property companies doing it. But I mean, I guess the reason we're doing the is I'm worried about whether we're actually getting the smaller enterprise supply companies doing it. I mean, John's comments about steel were very cheery, although early days, right? Early days. What are you seeing?
In terms of transaction?
Transactions, yeah. I mean, I want deal flow for you. I want you to be successful in the SME spaces or the supplier business space as well.
Yeah, sure, I can get that for green enabling activity later, but I will share the transaction we have done back in 2021. So at that time, we have worked with a commodity trader to help them to set up their low carbon aluminium desk in APAC. The whole facility is aimed to help them to source low carbon aluminium, which at that time is to meet the LME's threshold. For that facility, we provide an incentive, like a discount on our margin, and they will pass the incentive to their supplier. So that's kind of to incentivize or to help their suppliers to get proper transition measures in place for their own transition activity as well.
Well, and for those who don't know, aluminium, which is energy in a block of metal, basically, the type of energy that it's producing is critically important. And so much of aluminium in China is produced in high carbon coal plant sectors. What was changing? I guess the sourcing must be difficult. Are there other sectors you think are moving as quickly as that? Do you see? What gives you hope in this sector?
You mean the metal
industry,
and mining?
Clients that are moving.
Yeah, they are moving, definitely. That's what we have seen. Yeah, because I think we mentioned that there are tools available for them to define low carbon transition, green enabling. So on the funding side, I would say banks, we are all here, and we will also be there to support our clients on that as well. So yeah, I see quite positive changes on that front.
In taxonomy language, for those of you familiar with the word taxonomy, we've got 4 kinds of strands we've been developing, especially the European taxonomy. Mitigation, straightforward emission reductions. We've had transition investments, which is going to be a feature of the Hong Kong OMA's announcement of taxonomy upgrade today, tomorrow. I'm not sure the exact timing, the formal announcement for the consultation. Resilience investments, which will also be part of the Hong Kong OMA, and enabling investments. So there's all sorts of enabling things, from critical minerals to grids and so on, to allow all the other things to happen. There's a lot of areas to work on for resilience. But maybe I might just move over to Nneka for a minute. and I hope you don't mind my comments earlier about sustainable Fitch. I still think it's incredible. There's a rating agency that puts the word sustainable in front of it. I mean, talk about a symbol of how the world is changing. But what do you see in your client line, business line, about what's happening in the greening supply chain area?
We've already touched on a bit what Xing mentioned about the introduction of green enabling guidance from the ICMA that came out last year. For APAC, that's incredibly important. So I'll just explain at a very high level. This is now allowing entities that are involved in activities that are not in themselves green, that is, the actual production of the component or product is not zero emissions. However, it's an essential component for a green end use. So you could say, for example, production of solar panels, which is completely dominated by mainland Chinese manufacturers. In the EU taxonomy, that production of those components was not being considered as green, but you cannot generate solar energy without any of those components. So the introduction of this green enabling guidance is extremely important for Asia because of how much manufacturing capacity there is in this part of the world. This means now that companies that are essential contributors to green end activities can now come to the market with a green label and essentially give them access to the ESG labeled debt market. At Sustainable Fitch, we deal with a lot of different types of entities across Asia, and we also come across a number of proposals that we don't necessarily work on, but gives us a sense of the type of things that are being financed in the market. I would absolutely say there has been an increase in questions around the application of the green enabling guidance. There was a big push in interest last year, shortly after it was published, and I would say again this year in June when they provided some additional guidance with example projects. We have had another rush, and actually not just in Asia. We've had colleagues...
You said a rush? So a lot of interest?
Well, non-existent before ICMA.
That's fantastic.
Well, before ICMA introduced this guidance, we would get questions
That's worked.
Yeah, we would get questions from companies that would say, I produce something, it's an essential component for wind turbines, but I can't do it low carbon because the technology is not there, but all my customers are renewable energy companies in Europe. How can I finance this under a label? And we couldn't, there wasn't a way to do it until ICMA, and members of the working group who helped to put this guidance out into the market have resolved that imbalance that was existing between developed markets and emerging markets that were making the things that they actually needed. So, do we expect there to be more? I absolutely expect there to be more dedicated green enabling financing. It may start first in the loan market, just because of the size of the companies that are producing some of these components. Not all of them have a credit rating and the ability to issue bonds on the international capital markets. But if you start with the loan market, then you'll eventually start to see it. In terms of bonds that are in the market, we have seen some bonds issued from Asian issuers that do have green enabling activities in their frameworks. And those are kind of things like fully vertical supply chains related to extraction of battery minerals, with the end use being the construction of a battery for an electric vehicle, for example. So these are the types of things. And I think the Australian taxonomy has kind of incorporated some aspects of this in its inclusion of metals and mining as eligible green activities. So I think we're starting to see a lot more development in terms of guidance. And when there's guidance, there's taxonomy. That enables banks, lenders, and corporates to understand where the opportunities are.
And I'm just going to, a little plug for us, we did the work of the Australian taxonomy in the metals and mining area, and we'll be rolling out global certification against metals and mining next month, coming through in the 4 key areas. So thank you for mentioning that. You mentioned loans as well as bonds, and of course, we should kind of, for supply chain stuff, it's going to be loan finance is going to be critical. And I guess it's a question back to Natixis. Marjun used to tell me years ago now that there were 10 times as many loans as green bonds, green loans as green bonds in China, probably a higher percentage by now. Is that what's happening in the work you're doing, direct lending to companies in the supply chain? Is that, give us a sense of how big this is, how much of a storyline do we have here?
You mean supply chain financing to embed sustainability? I would say we see more and more, and I see questions on the board. It's about the ICC, International Commerce Council's supply chain initiative. I would say that's, again, echoing what I've mentioned in the market. We see a lot of references and guidance to help us, like bank. We love standards. once the things can get standardized, that will ease our life as well. And for our own product offering, I think we see a lot of requests coming from our clients. We heard that, as I already mentioned, that they have pressure from their buyers or their clients.
Right.
So they have the incentive to transition, and we are helping them on that, including like to incorporate what they plan to do to reduce their footprint. We see a lot of clients are doing more and more product carbon footprinting, and we see them, to either install the renewable energy themselves or trying to secure renewable energy source for their production, because they have the interest, for example, in buyers from other regions, to push them to do. So we have seen that, and we have done some transaction in relation to that interest.
John or Nadira, you're interested in tackling the digitization of supply chain issues. Is this going to be important to developing greener supply chains? Is that useful, the ICC initiative? One of the questions have been asked online. The question is, the ICC has a digitization of supply chain initiatives. Will this help increase the development of greener supply chains? Or is this not that important, really?
Well, I think having access to better data in general is obviously important. We actually formulated a 2025 target that we later realized we should have formulated differently, to be transparent, where we said we were going to build a digital platform to help us engage with suppliers more effectively. And then we realized the platform is just a tool, it's just a means to an end. What's key is better data, so wherever we get that from. So we're working more, we're conscious of the need to work more with thousands of suppliers to get better digital data. I think with what's happening with AI, even large companies' ability to do a lot more in-house, there's a lot better use of data, but I'm not very much familiar with the specific development that's being referenced here. So I can just say in general, we absolutely recognize the need to have a systematic approach to better supplier data, but it can be through external platforms like EcoVadis, SEDEX, as well as what we can build in-house. So I don't know if that's a complete answer to the question, but it's the best I can do. So.
One of the questions that has come up often of greening supply chain is preferential financing. This is financing that's particularly supportive of green initiative. You were mentioning earlier some relations of a bank, and I think Nadira, you were as well. How important is that, but particularly in a complex portfolio like at Jardine Matheson, the organisation sourcing, providing or enabling of preferential lending programs, whether from a Tixis or someone else, in this area. Has that been a feature of the change? Do you see that becoming more important?
I will
Green supply chain lending, basically.
Yeah, I will speak in more general terms in relation to
Please.
this question.
No.
Which basically I think that these types of initiatives are quite exciting, because what they do is they bring together different parties and are able to provide different sources of pressure, or maybe positive engagement around change with the suppliers, but in a way that actually helps them to achieve. I think that most of the time, I mean, I don't think that suppliers are looking for ways to not deliver their products in a more sustainable way. I just think that part of the challenge is the cost of being able to achieve that. Whether they need to maybe overhaul their entire supply chain or their entire lines, their production lines and so on. Those are big questions that they need to actually answer. So When you've got different partners coming together and actually finding a way to be able to achieve that in a manner that actually is helpful to the supplier, instead of it just feeling pressure constantly to be able to deliver lower carbon materials, I think that that's a positive thing.
Nick, there's a question aimed at you at Sustainable Fitch about issuers coming to market from an enabling perspective. I think the question is, do you have any insight into whether there's a differential investor base, or whether it's basically the same investor base buying things that would fit into that would expanding the broad category, the green category? Any views?
Yeah, so I think it's primarily coming from being allowing participants in the green value chain to fully access green financing.
Yes,
so I don't think that it's an investor-driven initiative. Having said that, most of the investors who are looking at sustainable investments have a range of criteria that would determine whether or not a particular investment is eligible. So let's say somebody has come to the market with something that's green enabling. They may still have questions about that issuer's overall sustainability strategy, their level of disclosure on greenhouse gas emissions, and other important sustainability data. So one of the sort of challenges we look at in terms of what we think is the potential issuance for green enabling labeled bonds, because metals and mining is kind of a key sector where they could benefit from this, is that the overall sustainability story of those issuers is likely to get additional scrutiny if they come to the market with something that has a green enabling label. And so it may take some time for those companies to get their sustainability story straight and to a level that would be equivalent to the types of issuers we normally see, because this would essentially be issuers from sectors that are not very highly represented in the sustainable bond market at the moment. And so if your overall business does have some kind of potentially negative environmental or social impacts, the investors will have questions about that. So I think we can probably expect to see, as this matures, like I said, with the inclusion of new taxonomies that are considering these sectors, this is going to give opportunity for those companies to improve themselves in disclosure and transparency, to be at the point potentially maybe in a year or two to start to see more of these bonds coming to the market.
Cool. Well, that's a real driver for change. That's coming true. That's very interesting indeed. We need to wrap up our panel. John, can you give us your final thoughts? And I'm interested in what you see in the future now. Is it exciting, or is it just dribbling along?
I think there's a lot of excitement. So micro, macro perspective quickly. Micro, in real estate and steel, we're going to start seeing more specifications to tenders from the participating real estate companies. We're going to start to see more sharing of VPD data. We're just letting the steel companies know which projects are upcoming, and we're trying to do matchmaking. So that's the micro perspective. Macro, clean technology, I think, is 10% of China's GDP now. China's emissions may have peaked. Xi Jinping reaffirmed China's commitment to climate action. I think this is the right part of the world to be in for people that want to move with clean technology to try to accelerate change.
The right part of the world to be in. Well said. Adira, final thoughts.
Sure, I guess I'll follow the same model, micro, macro. So from micro perspective, I think that the biggest and most interesting part is that we're seeing a lot of questions around how to properly integrate ESG or sustainability into the day-to-day of everyone's job across different functions. And I think that this is actually transformational. That's micro. From a macro perspective, we as a group had identified quite some time ago and published, of course, in our TCFD report that carbon pricing is one of the big issues that we're facing when it comes to climate risks. What we're starting to see with, for example, of course, CBAM was brought up in the actual description of this panel, but we're starting to see these carbon border adjustment mechanism coming into effect. And the result of that is, of course, the export of this regulation to other parts of the world, as it is with most other regulations that the EU comes up with. But what has been happening is also the interest in the region in the development of different types of carbon pricing mechanisms as well. So we're starting to see in Taiwan, Malaysia, Thailand, Indonesia is also discussing whether or not to implement a carbon border adjustment mechanism. And then there's also some discussion now, and more recently I've been reading in the FT, that Brazil is also going to be proposing as part of COP30 a global carbon price. So I think that we're starting to see a lot of push in this direction, and that basically will help to really drive the change internally within economies, systematic change.
Thank you. Xing Lang.
So we're running out of time, so I'll be quick. So what I see as opportunities for us is definitely including net zero sharing from the regulatory side. So we have the initiative on carbon disclosure, as well as John, you mentioned about the taxonomy. So I think those developments as a whole can drive the whole ecosystem to more granularly helping the transformation journey that we aim to achieve as net zero economy. Yeah.
Thank you. Last words, the future. What do you see?
I would say the thing I'm most excited about in APAC is just the way that the different sustainable finance taxonomies have been developing. I think we've seen a lot of really interesting solutions and ways of reconciling economic development needs with a long-term pathway towards decarbonization. And I think seeing the way that different emphases in terms of sectors or activities in different regional taxonomies has been incredibly helpful. And I think when we come together in forums like this with different organizations in different regions and sharing knowledge, I just feel like the kind of benefit of sharing those ideas over the past sort of 6 to 12 months, I've really seen a lot of out-of-the-box thinking. So I think I would agree this is the right part of the world to be in. I think there's a lot of opportunity to actually make a significant impact through sustainable finance in Asia.
You've heard that there are changes underway. There is clearly a revolution underway in terms of how we manage our economies, how we manage our financial system, and the KPI, the evidence, if you like, is the growth of green finance. Certainly, there's a lot more to be done, especially in the entrails, the workings of the economy, which is what this panel has been about. But this has already happened, this is happening as well. A transformation certainly has started, whether it be in steel, whether it be the nature of finance to SMEs, whether in the property sector. These things are well and truly underway. Look, this is no small thing. This is the workings of the economy. This is the jobs, the bulk of jobs in the economy are in these kinds of sectors. We need to make sure that we can create futures that are fit for our children, but also fit for our workers, also fit for our industries, and through that, fit for my pension. I want my pension paid. I need all of these industries to prosper. I need them to prosper in a way that will achieve a better world whilst also achieving returns. And I think we can hear today there's something happening here. It's an exciting area. Thank you so much for being part of this, and thank you so much for your work in driving this change. This is incredibly important for us all. Please give them a big clap.